Welcome to Complete Aviation Solutions Deep Dive number 114. Our mission here, well, it's always the same. Take a whole stack of the latest industry sources, sort of sift through everything, and pull out the most important bits of knowledge and insight for you. It's really your fast track to being genuinely well-informed about this really dynamic world of aviation.
And today, yeah, we've got a pretty fascinating cross-section of that evolution. We're going to dive into some recent developments, things spanning aircraft transactions, some pretty high-stakes legal battles impacting airlines, and also some exciting network expansions.
That's right. We're going to kick things off by unpacking a recent aircraft sale. It involves some regional jets from an airline that, well, sadly isn't flying anymore. We'll shift focus a bit to a legal dispute. It really highlights the complex financial side of things in this industry.
It certainly does.
And finally, we'll look at how airlines are, stretching their wings again. New routes, more flights, growth.
Exactly. It's a good mix today.
So let's jump right in. First up, this interesting deal involving Transporti Verhaldus. They're an Estonian state-owned lessor,
Right.
and they've sold some regional jets. Now, what makes this really compelling is these are 7 CRJ-900ER aircraft. They used to be operated by Regional Jet.
Which was a subsidiary of Nordica, yeah.
Exactly. And Nordica, you might remember, went bankrupt back in January 2025, stopped flying in November 24.
And what's really fascinating here, I think, isn't just the sale itself, but the whole journey these specific aircraft have taken. It really shines a light on the ripple effect when an airline goes under.
Yeah.
And it also shows there's this, active, though sometimes complex, secondary market for used planes, even ones that have been sitting in storage for a bit.
Definitely. So the buyer here is Region 1, that's a U.S. lessor,
Yeah.
and the price tag was USD $37.5 million for the 7 jets. Now, these planes, they're not exactly brand new. They're aged between, 12 and a half and nearly 17 years old.
Right.
For regional jets, what does that age typically mean? I mean, are they still attractive on the secondary market?
Oh, absolutely. That's a great question because that age range, 12 to 16 or 17 years, it's actually quite strategic for regional jets. It's not old like you might think of an old car.
Okay.
These aircraft often have a lot of operational life left in them, especially if they get the right maintenance checks, maybe a midlife overhaul. For a lesser, like Regional 1, who really specializes in, buying and remarketing used aircraft,
Right.
that age range can be a real sweet spot for value. They can pick them up cheaper than new ones, obviously, do the needed work, and then lease them out to other carriers who want cost-effective capacity without that huge upfront cost of a new plane.
So it's finding that balance, identifying assets with good potential, even if they're not fresh off the line. And these particular ones, they've been stored at Tallinn Lennart Meri Airport since Nordica stopped flying. And it's not just a straightforward handover either. Transporti's Verhaldus, the seller, they're actually covering all the extra service expenses, technical checks, maintenance, everything needed before Regional 1 takes them, which should be by autumn 2025.
Yeah, that's a significant part of the deal.
Does that level of commitment from the seller, covering all that extra cost, does that suggest they were really eager to get these off their books? Or is that fairly standard for planes coming out of storage?
Well, it's probably a bit of both, but I'd say it leans more towards urgency in this kind of situation. I mean, some level of prep for delivery is normal, sure,
Right.
but covering all additional service expenses, especially big things like technical checks and maintenance, that really signals a strong desire to make the deal happen quickly and make it attractive.
Makes sense. Get rid of non-revenue generating assets.
Exactly. They were likely costing money, just sitting there, storage fees, basic upkeep. So covering the extra work makes the jets much more appealing to a buyer, especially coming out of storage like that.
And what's also interesting is this wasn't the first attempt to sell them.
No, it wasn't.
They initially had talks with a higher bidder, but that fell through for some reason.
Happens sometimes in these complex deals.
So Transporti Verhaldus then turned to the second highest bidder, which was EIC Aircraft Leasing. That's part of Regional 1's parent company, Exchange Income.
Right.
And that led to the binding sale agreement this past spring.
Right.
And it wasn't like nobody wanted them either. Apparently 30 companies initially showed interest.
Wow, 30.
Yeah. And 11 actually submitted formal offers.
The fact that 30 companies were interested and 11 made formal bids even after the first deal fell through, that really speaks volumes about the demand for these types of regional aircraft.
Really does.
It shows how the secondary market acts as this sort of crucial shock absorber in aviation. An airline fails, but these valuable assets, they don't just vanish. They get reintegrated, find new life somewhere else, often with operators needing that kind of flexible, affordable capacity.
Yeah.
So this sale, given the age and the storage period, it definitely points to strong underlying demand for reliable regional jets. And lessors like Regional One are right there to capitalize on those opportunities.
It's a clear sign, yeah. Resilience in that secondary market, even after a bankruptcy. Okay, let's shift gears now. Moving from assets changing hands to a different kind of high-stakes situation this time, it's in the legal arena.
Ah, the legal side, always complex.
We're looking at a significant legal appeal involving an Indian airline, SpiceJet. It involves Kalanithi Moran and his investment firm, KAL Airways. They're appealing to the Indian Supreme Court.
Okay.
This is against a ruling from the Delhi High Court back in May 2025. That ruling dismissed their claims against SpiceJet for, well, a pretty staggering amount, INR 13.2 billion.
Which is about, what, USD 154 million?
Exactly. USD 154 million.
Wow. That immediately raises the question, what's really at the heart of this? I mean, a dispute worth that much reaching the Supreme Court.
Yeah.
There must be some deep history there.
There is. Moran and KL Airways, they actually held a majority stake in SpiceJet, about 58.5% between 2010 and 2015.
Right. I remember that period.
The core of their argument now relates back to when Moran sold those shares to the current owner, Ajay Singh, back in 2015. Moran claims he paid for convertible warrants and preference shares as part of that deal.
Okay.
That were allegedly never actually issued to him.
Ah, okay. So non-delivery of promised equity instruments, essentially.
Precisely. And just so everyone's clear, can you quickly explain what convertible warrants and preference shares are in this context? Why is their non-issuance the key issue?
Sure. Think of them as sort of promises of future ownership, but with specific conditions attached. Preference shares usually pay a fixed dividend, and they get priority over common stock if the company pays dividends or liquidates. More stable, usually no voting rights. Convertible warrants, on the other hand, they're more like options. They give the holder the right, but not the obligation, to buy company shares at a set price later on. So Moran's argument is basically, I paid money as part of the deal, expecting these specific future equity instruments or claims, and I never got them.
Right.
That's critical because it means he feels he paid for something valuable, a potential stake, or a higher claim on assets that he never received. Hence, the claim for damages.
Makes sense. Now, the Delhi High Court, when they dismissed the claim, they used some incredibly strong language. They called the plaintiff's strategy willful concealment of facts and a calculated gamble.
Oof. That's very strong wording from a court.
It really is. What are the implications when a court uses language like that? Willful concealment, especially for companies in a regulated field like aviation.
Well, that kind of language, it's not just dismissing the case, it's a serious indictment. It signals the court believed there was an intentional effort to mislead or hide important information.
Right.
For the individuals and firms involved, especially in aviation where reputation and regulatory trust are paramount, findings like that can have major fallout beyond just losing the lawsuit.
How so?
It can damage reputations, obviously. It could make it harder to get financing or regulatory green lights in the future. It might even open them up to other scrutiny or legal actions around corporate governance and transparency. It really sends a message about how seriously the courts take ethical conduct in these big corporate deals. It could definitely impact future M&A activity in the sector.
So significant potential repercussions there. The first hearings in these two related cases, one by KL Airways, one by Moran himself, they're set for July 18th, 2025. SpiceJet, meanwhile, hasn't commented.
Yeah, keeping quiet for now. You know, connecting this to the bigger picture, this whole case just vividly underscores the incredibly complex financial and legal webs that can get tangled up in airline ownership changes. That amount, USD 154 million, I mean, for many airlines, that's a huge chunk of their annual operating profit, or even exceeds it. It highlights how these long legal fights can really threaten an airline's financial health and stability.
It's a stark reminder.
Yeah, it shows that the business isn't just about flying. It's this constant interplay of high finance, intricate legal deals, corporate maneuvers, and these things can drag on for years and really shape a company's future.
Okay, let's pivot now to something a bit more forward-looking, maybe more optimistic. Network expansions.
Ah, growth. Always good to see.
Definitely. This is where the industry really starts to, stretch its capabilities again. And we're seeing some pretty exciting moves, particularly from Scoot, Singapore Airlines' low-cost arm.
Right. Scoot's been quite active.
They're launching new services into Southeast Asia, mainly. We're talking Da Nang and Nha Trang in Vietnam, and also Kota Bharu in Malaysia.
Nice additions.
These are starting progressively between October and November 2025. Da Nang, for example, kicks off with 3 weekly flights using A320s, but they plan to ramp that up to daily by December.
Wow, building it up.
And Nha Trang starts with 2 weekly flights using the newer Embraer E190 E2s, and that goes up to 5 times weekly by January 2026.
Using the right aircraft for the route size, too. Smart.
And there's more potentially coming. Subject to approvals, they're also eyeing services to Medan and Labuan Bajo in Indonesia, and even Okinawa in Japan for the winter season.
So this isn't just, throwing darts at a map. It feels like a very strategic push by Scoot into these high-potential markets that really fit their low-cost model.
Yeah.
I mean, these new spots in Vietnam and Malaysia, they're growing tourist destinations, also business hubs, perfect for Scoot's strategy of connecting major hubs like Singapore with these secondary cities efficiently.
Right.
And the way they're ramping up frequency, starting slower than going daily, that shows a kind of measured, confident approach. Testing the waters, then building demand.
But it's not just about new dots on the map, is it? They're also boosting frequencies on existing routes quite significantly.
Exactly. And that's a really clear strategic move. It's about supporting what they expect to be higher demand, especially coming into the end of the year, holidays, and beyond. For example, Jakarta flights are going up from 25 to 28 times weekly starting this month, July 2025.
And it goes further than that. The Philippines is seeing big increases too. Clark goes from 5 to 7 weekly flights from August. Davao up from 10 to 12 weekly from September. And Manila gets another weekly flight going 13 to 14 from September. And what's really interesting there is that half of those Manila flights, 7 of them, will use the bigger Boeing 787 wide-bodies.
Yeah, that's a key detail.
Is that just pure demand? Or is there a competitive strategy there too?
Yeah.
Trying to grab more market share in that busy Southeast Asian LCC space?
Oh, it's definitely both. But I'd lean heavily towards a strategic play for market share there. Sure, demand's a factor, but boosting frequencies and putting wide-body 787s on a key route like Manila, that signals Scoot is aggressively going for capacity leadership on these really important corridors.
Okay, flexing their muscles a bit.
Exactly. They're positioning themselves not just to meet current demand, but to really capture the expected full return of international travel. Using those bigger planes lets them move more people more efficiently. And yeah, it absolutely puts pressure on their competitors. It shows Scoot is very confident about the recovery and growth in those specific markets.
Right. Yeah, we also see increases to Thailand's Hat Yai, that's going up 1 flight a week. And even further afield, Australia. Perth goes 12 to 14 weekly from August. Sydney gets a big jump too, 10 to 14 weekly, starting this month.
Yeah, substantial increases across the board.
So when Scoot's CEO says they're excited to broaden Scoot's network, and the increased frequencies will support higher demand, and they'll keep seeking new opportunities for growth, it sounds like that really matches what we're seeing on the ground, this confident expansion.
It lines up perfectly. Actions speaking louder than words, or maybe just as loud in this case.
And Scoot's not the only one boosting connectivity. We've got another significant development, this time from Royal Air Maroc, which is great news for travel involving Africa.
Indeed. Royal Air Maroc is resuming its nonstop service between Munich and Casablanca. That starts October 20th, 2025.
That's a route resumption, right, and used to operate pre-pandemic.
Exactly. It was a long-standing route for them, but it hasn't flown since before everything shut down. So its return is actually a pretty notable sign of recovery and its strategic importance to them.
Okay, and how often will it fly?
It'll be twice a week, Mondays and Fridays, using a Boeing 737-800. And the flight times, they've planned those quite strategically to allow for really seamless connections once you get to Casablanca. Connections to lots of places within Morocco itself, but also crucially to many cities across West and Central Africa.
Leveraging the Casablanca hub.
Precisely. We're talking connections to places like Gambia, Nigeria, Ghana, Senegal, Ivory Coast. It really reestablishes a key link, a gateway for both business travelers and tourists between Europe and a significant part of Africa.
So what does all this expansion activity mean for you, the listener? Whether you're a traveler looking for new places to go, or maybe a business that depends on air freight and global connections?
Well, I think these expansions and these resumptions, they really signal a pretty robust and confident push by airlines. They're not just reacting to demand. They seem to be proactively working to meet the rising demand and reestablish and even strengthen these crucial global links.
Yeah, it feels like a very positive sign for the industry's ongoing recovery. and strategic growth. So thinking back, we've covered quite a bit. We navigated through that intricate sale of used aircraft from a defunct carrier, which showed us that dynamic secondary market.
Mm-hmm.
Then we delved into that really complex, high-value legal battle, highlighting the deep financial and legal stuff that underpins airline ownership.
Yeah, the less glamorous but vital side.
And finally, we soared into those exciting network expansions by carriers like Scoot and Royal Air Maroc.
Yeah.
It really paints a picture of the industry's continuous cycle.
Mm-hmm.
Manage your assets, deal with the legal complexities, and keep growing strategically.
Absolutely. The industry just remains incredibly dynamic, doesn't it? Always adapting to challenges, always looking for opportunities. You see it right here. Old aircraft finding new purpose, these huge multi-million-dollar legal fights shaping the corporate scene and setting transparency standards, and then the sheer optimism of launching new routes, connecting continents, enabling more travel.
Yeah.
It's just abundantly clear that aviation is always in motion, constantly reinventing itself, pushing forward.
So wrapping up, what does this all mean for the future? For air travel, for the whole global aviation landscape.
Mm-hmm.
As demand keeps surging and airlines are clearly focused on rebuilding and expanding, what do you think? What are the next challenges or maybe the next innovations just over the horizon for how we all move around the planet?
That's the big question, isn't it?
It certainly is. Something to keep a close eye on.